Well, so there, I'm actually I'm gonna steel man something and push back because you've said that hash rate increases and decreases while at the same time we've talked about how Bitcoin can remove some of the human element to get us out of this cycle, the commodity cycle or the price cycles or whatever you name it. Understanding, of course, trending generally in one direction with higher lows and higher highs, but if we're talking about a change in hash rate, a change in all this, like given what you've described about we're chasing ultimately all of GDP or all of value divided by 21 million, what information then can we glean from decreases in total hash rate? Because we've said if the case is ironclad that we're pursuing price discovery of all of all of value that we've labeled GDP divided by 21 million. And there's a race to get as much hash as possible because I want to accumulate as much Bitcoin as possible so that I have, of course, the greatest percentage of this, whatever the division ends up being. Why then do we see drops in hash rate or a kind of a cyclical flow of increases and decreases absent the difficulty adjustment that you've described, which is very, very like I'll call it kind of very micro changes because again we're moving at a moving average, but these bigger commodity cycle boom and busts in hash rate.
Mm-hmm. Yeah. So the human element with Bitcoin is not fully removed. It's just caged. So I think that's a great question because we're not fully removing ourselves from the equation, but we are limiting what we can do. So for example, when the hash rate declines and we get difficulty adjustment coming down, this is a sustainability mechanism because when the difficulty comes down, hash rate decreases because miners are not profitable. And as that hash gets turned off and relocated or liquidated, whatever it is, the difficulty decreases. So this becomes now a sustainability mechanism. But if you look at our traditional system, what do we need for sustainability? Well, look what happened during COVID. We had to lower interest rates immediately to zero, and then we had to perform quantitative easing. We had to monetize government spending, and we had to take all of those actions for sustainability. So the decrease in the difficulty adjustment is partially caused by human mismanagement. A miner getting involved in the industry when the market price is trading at a premium to the cost of production, and then using that premium price as a baseline and thinking that the price is going to stay at such a high premium to cost, and then running that out in their numbers. And then when price comes back down to fair value or to cost of production, the whole model breaks down and their business starts to lose money. But what's amazing is that we don't need the Fed to lower interest rates. We don't need to print more Bitcoin or print more dollars. The difficulty adjustment comes down, the cost of production comes down, and the miners who are managed properly are rewarded because they become more profitable. So it's really a sustainability mechanism as well on the downside, and then on the upside, a price discovery mechanism. It's unbelievable. There's never ever been anything like it.
So essentially, it's minimizing malinvestment too.